Okay, hello everyone. Welcome back to the channel. Matt with Green Bar Trading here, and welcome back to another weekly watch list video. You are going to get so much out of this video. I really put together a lot of research for the week ahead. We're going to get into the charts, and I'm going to show you some interesting things. So you're definitely going to learn a thing or two with this video. And that's really my point in making these weekly watch list videos, is to show you guys something that maybe you didn't know, and just picking up little things along the way. So before we get into it, hit the thumbs up for the video. And if you're new, consider subscribing. We have new videos just about every single day. So getting right into it, we're going to start with the earnings for the week. All right. Nothing huge on tap, but it's still nice to know where we sit on our earnings. And in a couple of weeks, we start up earnings season, which should be absolutely insane. So this is the earnings. Going over to the economic calendar. This is where it gets interesting this week. So for me, looking at this Friday with the non-farms payrolls, the NFPs, the jobs report, this is everything. So on Friday, a big day, the Fed looks at this. This is very important for them, for the market, how the market reacts. We saw the PCE on Friday, came in hotter than expected, not great for the market, because that means that the Fed is going to have to keep their foot on the throat of the economy by keeping rates higher. And that brings me actually to my next point here. On Monday, it doesn't say anything about what I'm about to show you. And this is maybe something you're going to learn in this video that you didn't know. So on Monday, we just got word of an emergency meeting for the Fed. So the Fed closed door meeting. It's going to happen Monday, 11:30 in the morning. The Board of Governors of the Federal Reserve are going to meet, and it will be held under expedited procedures. And the matters to be considered: the review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. So this is interesting, because what we're seeing around the world is a lot of financial systems that seem to be on the brink of breaking. And we saw the Bank of England have to actually step in, which this is really wild. This happened last week. The Bank of England had to step in. They were ready to start unloading their bonds like we have been doing, and instead switched and actually had to start buying bonds back because of the huge sell-off in their bonds, which makes yields spike. So you had a lot of margin calls that were about to happen. So their central bank had to step in. Now, I don't know if this is going to be related to that. Nobody knows. It's just something to keep in mind, because when the Bank of England did that, that was the only day that we actually rallied for the week. So, a lot of people are saying that these really quick moves in rates that we haven't seen in a very long time can be potentially breaking something. So when you hear that, the Fed might break something, they're going to have to step in and, because they've been wrong on policy, they're going to have to potentially do something different. And, it's anybody's guess what that can be and the effects on the market. But just so you know, this is what I'm here for, is to tell you guys of this kind of stuff. So that's this Monday. We went over the economic calendar. Friday's the jobs. Now, looking back at the sectors last week performance. Energy ranked number one, and the worst was utilities, down 8% for the week, a very big decline. And when I get into the charts, I'll actually show you guys the ETFs that I'm actually looking at that have interesting setups for the week. But this is just, we like to know what's hot, what's not, what hasn't been. We have the 1 month relative performance, one of the worst months in the stock market. We came in at the beginning of September making this video saying September is normally the worst month for the stock market. Well, it definitely lived up to that. Real estate down 14% for the month. I mean, at technology down 12%. Every index down huge. So that's our sectors. And the next thing I want to show you guys is another interesting thing. This is more, so what this does is it asks if somebody is bullish or bearish. So a lot of, the big institutional investors, they get asked this question every single week. They've been doing this since 1987. So you have a lot of data here. Usually when the bull number is that low, which is crazy low, and it's been going a lot lower, the sentiment in the overall market is extremely bearish, really bad. Usually that is the best time to buy. Now, I'm not saying go out Monday morning and dump all your money into the stock market. I'm just saying from a historical point of view, you can look back. I mean, these are some of the worst numbers that we've seen in a stock market that's down 20% or more since the financial crisis. And that was the best time to buy because the market just went straight up for the next, 14 years. A very solid bull market was created after that financial crisis. Can we be seeing maybe a financial crisis of some kind, maybe Fed induced? It's possible. And these things can last a while. They can last a couple of years. Like we saw back here in the 2000, the dot-com bubble, it lasted 3 years before the market actually bottomed. So, it could be a lot more pain ahead. I'm just saying sentiment is very low, and these are usually the times that you want to buy. So coming out of these, really bad parts of the market, usually you could pick up good companies. That's the key. Pick up good companies that are on sale because people just have to unload during this time. So that's an interesting indicator. I like to always look at this. This is one of the lowest, like I said, I've seen in a long time. Very low bull number. I like that for a market bounce at some point. We're very oversold. All right, so going over all that, then we head over to our compass, right? We're looking at the SPY, the S&P 500. What did we do on the daily chart? Well, we had a horrible day on Friday. It was so bad on so many different levels. The volume was very high. That's extremely bad. When you have a day that sells off like this, when you have a candlestick on the daily that looks like that, that's not good. Breaking June lows, breaking out of consolidation on high volume means that you have the start of that capitulation. You have people, I've had it, they're throwing in the towel, and that's what you see. So we broke out of consolidation. We were watching this very carefully. We had this between 360 and 370. It was kind of just trading around there for about 5 days, and then we broke down. So where do we go from there? Okay, that's anybody's guess, but and you never know what happens with the macros, the outside forces, the Fed, what they do. So looking at this on a weekly chart, this is what I want to show you guys because this is super interesting. On the SPY, you had back here in 2000, right? So you had the dot-com bubble. We had a huge run up in the market, and it took 7 years for the SPY to get back to that same level. Now, that's just the SPY. The Qs, which is the technology, that is a way different story. That actually took a lot longer. And I'm showing you guys this bubble area because I do think, and you know, you could just look at this chart right here, a very clear bubble we were in, created by the Fed, and you know, all that monetary easy policy, all the money sent out, bloated the stock market. And we saw it back in 2000 as well with the dot-com. It was every single company saying they were going to put a .com after their name during the internet boom, and every company got so ridiculously valued. So anyway, we hit a high of 120 on the Qs back in 2000. Well, we didn't get back to that level until the year 2017. So 17 years later, the Qs got back. Now, am I saying that's going to happen here at 408 and it's going to take 17 years to get back to that 408? That's anybody's, you know, guess. I'm just here to show you historical patterns and what has happened in the past. As simple as that. So on the SPY, going back to this, we are currently, for the year, we are currently down 25% on the year. So that is the most since the financial crisis back here. We went down, let's see, close to open, we went down 37%. So 37% in the worst financial crisis that we've seen. We're down 25% at the moment. So from looking back, it could get worse, right? It could definitely get worse. And we're definitely trending down. I mean, it's clear as day. So the 200 moving average, this is something that I was looking at on the weekly. We actually broke through that on Friday. And we did not see any bounce at all off of that and closed into lows, which is also not good. So the only thing that we have going for us on the bullish side is this super oversold RSI. Usually when it hits this area, you will see a bounce. And you can go back and look at years of data when you see that either oversold level, right, which we had right here, sell off. Overbought level, I'm sorry, sell off, oversold, bounce. How long the bounce lasts, I don't know, but you can see some pretty good bear market rallies, which we saw right here in the summer. So something interesting I want to show you guys is if you put a minus sign in front of SPY, this is what the chart looks like inversely, right? So this is a clear pattern, and maybe this is easier for you guys to see because we are used to looking at the market from this type of perspective, you know, making a series of higher highs, higher lows, higher highs, higher lows, and then we just broke out right here and started to make a higher high. So that's just inverse minus SPY. You go minus QQQ, same thing. All right, we just broke out. It looks like kind of like a momentum stock, right? You have this going up and then the flat top, you had the consolidation, and then you saw that breakout. So that's just another way to look at the market from this type of perspective. But unfortunately, that's not what the market is doing. This is what we're doing, stair-stepping on down. So, yep, just looking at this on the SPY, Where do we go from there? Let's just see. We'll look at the weekly chart again. Where do I see this going? All right. So an obvious area, and something that a lot of people are looking at, is this 340 area, which is pre-COVID. You had some consolidation around that area. I think that this spot down here, so like around 320, this looks like a legitimate level, 320. That is a huge way down. I get it. And you're not going to go down in a straight line. But this looks to me like it was resistance, and then this was huge support, right? And then it came back, tried to retest this area at about 323. So, you do have some 340s in here. 320, though, is really a clear level. And if you ever broke that, then 300 is the next stop down. But that doesn't mean that we're not going to see a bounce back first to 370 maybe, and then some further weakness down. Like I said, this could change a lot if the Fed comes out and does something, or we see one of these bear market bounces. But the overall goal, if things get down here, you should really look into adding to a portfolio. And when things go down like this and you see things get cheaper, don't go all in. You have to just average into these positions. So you nibble on them, right? You buy a couple of shares. If the market goes down a little further, you add to that position and you build a position on a good, solid, profitable company that is trading at a discount. Look at the price to earnings. Look at what they're doing, their growth, and where they see their earnings going in the future. Good, solid companies that actually make money. That's what I'm doing. That's what I started to do. Started to buy Google, those type of stocks, Meta, stocks that are trading at really insane discounts right now to their historical averages. So that's what I'm looking at. And that was the SPY. The Qs we kind of went over on the weekly chart. The weekly chart is, like I said, .com. We had a bubble, 3 years of a lot of sell-off. The Qs lost 80% in those 3 years. Right now, we're down 33%. If this thing went down another 50% in the next 2 years, if the Fed is like really going to put us in recession, I mean, that's a huge amount. So if the QQQ went down 80% from the highs here, that means that we would be trading all the way down below 100, which is just a huge crash in tech. I'm not saying that it's going to happen. I'm just showing you guys how high this market has got. I mean, just look at this on a weekly chart. This thing has gone straight up. And what goes straight up like this will almost always find its way to fall back down to earth. So, certain things that we're looking at, we have a trend line here. This is where you start to try to guess where a bottom would be. And that's impossible. So, we're not even going to try to do that, but we have a trend line. We have pre-COVID highs. We will see a bounce at some point. Like I said, even during the .com bubble, you had like 6 or 7 times where you had rallies of over 20%. So there's going to be, opportunities both to the downside and the upside. I'm more interested in building on, long-term positions and, also just adding to those companies that we really see value in as they get cheaper. So that's the Qs. Looking at the Dow Jones, the DIA ETF. This one broke June lows, and now we broke pre-COVID levels. We are at levels that we haven't been at since since 2020 of October. just really, really wild moves in the industrials. Looking on the daily chart, same thing. You can see we were consolidating and then broke down. That's the DIA. And then we're going to look at the Russell. The Russell 2K, which is the small caps. This is the only one that has not broke their June lows. And you can see the consolidation right there. Not a great daily candle. The whole market was like that, but we're still consolidating. And until this breaks, we're not going anywhere. So that's what we're waiting for. Will this clear level break on the IWM? But that's just what the charts are showing us right now. So getting into a couple of interesting things. This is the advanced decline line. And I'm just going to take out. Don't need those indicators. So this is the advanced decline line. This is on the daily chart. June lows, you see here, hit at minus 2994. And then, you know, this kind of goes up and down all over the place. What I'm going to do is I'm going to set an alert. If this advanced decline gets this negative, I want to know about it because that was a good time to buy back in the June lows. So I'm going to create an alert right down here at the bottom of this advanced decline, because that is when we saw some good, intraday, really big sell-off. That was a good time to, possibly buy, for that day. So doing that here, I'm going to set the alert. If it hits, it hits. And then I could look at the market. Maybe we saw that huge washout selling. And then I want to see how the market reacts to that around that time. But that we saw back here, I'm just going to set an alert. If it happens, it happens. So the XLE, this is something that I'm watching, and we're going to put back our daily levels. So we have the 20 EMA, we have the 200 SMA, and we have the 50-day moving average. So we broke down, we're under all of that. Not a good sign for the bulls. But one thing I did notice, if we go to the weekly chart, there's a trend line here that we've been bouncing on all the way since 2020. And we're getting that bounce again on the weekly. So this actually, energy was actually up here on the week from when it opened below the week before that. So we did see the XLE, the energy, get back for a nice bounce. So I'm going to be watching the XLE and everything that the XLE is, right? So that's energy. That's the gas, the oil, that type of stuff. So you could go in, you could actually look at stocks that make up the XLE if you don't want to trade the ETF. But just to show you that this might be a sector that does see a bounce here off of this weekly trend line. So XLE, that's going to be on my watch list. XLU, huge amount of selling. Same thing that we've seen. Now, this thing can really move very quickly. We look at this on the daily chart. I mean, this is basically this trading range. You have a triple top here, right? And then a huge sell-off. You see these huge sell-offs, but then you also see huge rallies, huge sell-off, huge rally, huge sell-off. Utilities was actually one of those that were up on the year not that long ago. So I'm going to be very interested when the RSI is this low, right? For maybe a bounce. So that bounce, or if you wanted to just get into it and then cut below this right here. So about 64 area. If it broke below that, then you can get out. But, utilities was a big trade for the year. Utilities, healthcare, and energy are usually the best places to put money. Huge amount of selling, though. Now, remember, you're catching a falling knife here. This is a huge amount of selling. The reason why I'm showing you guys is we've seen this before, and then it could bounce pretty quick. So that's why this one's on the watch list. Interesting thing here. And that's about it. I think we went over everything. Sorry to take up a lot of your time, but please hit the thumbs up for the video, and I'll see you guys on the next one. Take care.